Hi everyone, my name is Simon Misiewicz from Optimize Accountants, and today I've got Irene with me, Irene Anggard, I shall say your full name, who has been a client of ours for 10 years, and we spoke offline about how long relationships kind of help you progress in terms of your career and in particular property investing. I really wanted Irene to be on this because she is now part of our website map, which you can help you as a property investor and landlord to identify people that will help you invest in the right way for property investments. And Irene, I'm going to kind of go on to you because this show is all about you and how you've been in property, how you're going to be helping people in property, whether they're internationally focused or if they're in the UK. Irene, tell us about you.
Oh, thank you so much, Simon, and thank you for everything. It's a real pleasure to be here and to try to share as much knowledge and as inspiration as I can. And I got going in property 10 years ago. I'm Anglo-Swedish, though based in Britain since 1998, and I was working all hours in the city. I'm sure many of you can relate to it, where you're just trying to hold down a job and juggle everything. And I wanted to invest in property, but I just didn't know how I could find the time to do that. And also, I needed experience and someone to frankly hold my hand. And so, way back then, I actually found a property shopper, a wonderful lady who helped to do all the heavy lifting while I was actually sitting in the office and doing my day job. And she was wonderful. And after that, I bought more properties. So I'm quite passionate now about helping more people to get out of a situation where they know they need to invest in property, for example, but they just don't know how to. And I've lived and worked all over the world, in fact, in every continent. And I speak Swedish. So I can especially help international and remote investors by doing all the heavy lifting on the ground and to help people to get more freedom and live their ideal life.
And,
So,
and can I interject on that
yeah.
point because you hit on a point that is relevant to myself and Louise, my better half. We were both in corporate worlds, working long hours, 50, 60 hours a week, and then trying to cram in the property research. And I think it's fair to say that we probably made some mistakes in terms of some of the first property purchases because we was trying so hard to cram everything in. If we had someone back like his good self back then, I think we would have been a lot more relaxed in with our investment. We would have had someone quite more objective, someone we can have a conversation with about a type of investment. When you're on your own, it's quite difficult to do that. Did you find that as well?
Oh, definitely. I mean, I was sometimes sitting in the office and I just got nervous about what I was doing. So I'd call my property shopper, this wonderful lady called Dina, and she would just calm me down and we'd laugh about it. And eventually I just became so comfortable that I could actually start doing it myself. And I can hand on heart say that she transformed my life. And it was also the decision that I made myself to actually just give her a call and to give it a try. And so yeah, it totally transformed my life. And we actually became good friends and we joke and laugh, let's go shopping. And that did not mean for shoes or dresses, it was property. So it just made everything more pleasurable and enjoyable, which really helped when I was very focused on my day job and doing my, you know, uh, working in the city. So yeah, totally agree, Simon. Um, so moving on from that, today I really wanted to, and Simon thought it would be a good idea to look at my model on how I believe that London residential property really builds wealth. And it's really a five-step process. And what I'm hoping today through this presentation together with Simon is really to share each and every one of those steps so you can see actually where the value is coming from. And it all starts with step number one, where I say value creation, which is actually in the service. It's actually deciding to buy, going for it, and actually buying a property. And in that step, there's a huge opportunity actually to create value. So if I just continue through this cycle, and then we'll go through each step a little bit more. So the first step and the most difficult one is actually making a decision. And there are different ways in which we can add value in that first step. And the second benefit is that actually, once you've bought it, you can then get rental income from the property. You might have heard expressions like yield, which is where you take the gross rental income divided with the property purchase price. And this is where you can actually see how positive the rental income is compared to the price of acquiring the property. And then most importantly, something that people often forget is rental appreciation. It's really important to continue increasing your rents as you go along because inflation happens, and there's also legislation that means that we can't just, be kind to our tenants for 10 years and then all of a sudden we need to increase our rents because mortgage interests have increased. I'm sure this is something that you will have seen, Simon, with in the market and with clients, that some people maybe weren't keeping pace.
Well, just on that point, actually, Iran, the whole point of numbers or and statistics tell lies. And one of those is in relation to gross yield. So whenever people look on various maps of the UK with property yields, they always see London as a low percentage and then high percentages in the north and think, well, actually, the north is a better location to invest in. And I don't think that's always true from my perspective, because if you buy a property for, I'm just picking out numbers here, but if you pick out a property of £100,000 and you've got a property £100,000 and it's got a 10% yield, well, then that's £10,000 rental per year. But actually, if you've got a property that's worth £250,000 with 5% yield, you might think that's lower, but actually your gross rent income is more.
Yes.
You have to be very careful with some of the data that you look at and think, well, I'm going to base my decision on rental yields, when absolutely you need to look at what the story tells you. And if you look for one property that gives you a lot of income as opposed to having need to have two, three properties to generate the same amount of income, then you need to have that conversation with Iran.
Yeah. Thank you. That's such a good point, and that's why we really believe in the numbers and looking very carefully at the deal analysis to understand, the impact of everything. So we'll be diving more into that. So just to finish off with this model, then you've also got the capital growth, and this is the really yummy bit. It is what I call the slow cook. You basically leave a lovely stew in a pot, and it will really generate wealth over time. So on average, two-thirds of the sort of the generation really comes from the capital growth. And so it's very important. And then leverage. If you're anything like me, you might have had parents tell you, oh, bank lending is bad, or, lending is not good, or etc. But I've really come to believe that if you can leverage sensibly, not over leverage, it can be an amazing opportunity. And I'll do a deep dive later on in the slide about how this can be a really amazing opportunity. So what we have is this positive virtual cycle, and that's what we really are looking for, where we manage things sensibly, and then it becomes just a positive virtual cycle, which really benefits you and your ancestors for generations, subject to tax, but that's Simon's department.
We won't go into that. We won't put people to sleep. One question I have for you,
Yeah.
Iran, is this whole point of people saying that property is a bad thing. There's obviously legislation. Governments seem to hate landlords, albeit they definitely need them. There is no two ways about that. They're not building enough houses in local authorities to help people be housed. There's also this notion of, well, you should buy stocks because that's going to be a lot easier than property, which, let's be fair about it, it only takes one person, Donald Trump in this case, to flatten the market overnight.
Yeah.
And then people are saying, well, stock markets is trash, it's no good at all. But property is a lot more for me anyway, and I'm sure it is for you. It'd be great to hear your side. That I think property is a lot more stable.
Yeah, I couldn't agree more. It's so, so true. And gosh, there's a lot to talk about here. But just to pick up on what you were talking about with media, I see in the stock market that often when things are dropping quite rapidly, and then media comes out with sell, 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 it's all going to the bottom, and really exploiting that fear, that's the time to buy. So I'm a bit of a contrarian investor. And with property, I can see that there's less of an opportunity to scaremonger because it's not as liquid. You can't sit at midnight and decide to sort of sell your stock portfolio. So there is less of a chance to make emotional short-term decisions. What is important is to manage the asset long term and to make sure that it's cash flowing. So when the unexpected happens, which, let's face it, it will sometimes, COVID happens, etc., that there is enough of a buffer and that things are properly managed and that everything is legally done, because then you stay in the game, but the people who are not running their businesses properly and managing their profits, they don't stay in the game. But if you do things properly and legally, you really just stay in the game. And I see a lot of this scaremongering that you were referring to, Simon, in media. I see it as an opportunity because some landlords who maybe have taken their eye off the ball a little bit, not kept up with the rental appreciation, maybe not maintained their property, they maybe become keen to sell, but also because of the scaremongering. And I believe it's actually an opportunity because I've heard, I don't know for sure, that a lot of financial institutions and banks are buying, and they're buying for reasons that I'll present later. I believe that actually, when you look at the long-term perspective, property is only going one way, and that this positive virtual circle will only stand to benefit people who make a decision, enter the market, manage the assets in a sensible way. And yeah, that's what I believe. I'm passionate about it. And I really believe in it. It might be worth just going on looking at the impact of time. That's actually the next slide. But interject when you want, Simon, because this is actually the cost of not making a decision. And sometimes looking at the opposite can be really helpful. So this is where we can see the impact of inflation. For example, if you have 1 million today, and then instead, in 10 years, you just keep the money in the bank. Let's say there's so much scaremongering, you're fearful, you want to stay safe, and there is a real inflation of 10%. So often the true inflation is a lot higher than what's officially reported, sometimes the double. So it might be an official inflation of 5%, but here we can actually practically see visually what will happen with your true wealth in terms of purchasing power. And the difference instead is just making a decision to buy an inflation hedging asset like property, which will also generate a rental income and capital growth. And this is where you see the return on capital employed here in green. It just gives a visual sense of actually what can happen with your capital over 10 years. And that's why it's so important, as you said, Simon, not to listen to the scaremongering, but to educate yourself sufficiently in order to make a decision and then look for someone to give you a helping hand to buy. Any thoughts there, Simon?
No, I think what you've said, it doesn't need anything to be add on there. The one thing I would say in terms of standing still, that's not an option. It just isn't. You will lose more than you will gain by standing still. The one phrase that always comes to mind when it comes to investing is, when is the best time to invest? That day was yesterday. What's the second best day to invest? Today.
Yeah.
It's not tomorrow or next week because tomorrow never happens. And I think that's the problem with most of the investors that I see.
Yeah, so wise. Thank you, Simon. Absolutely. So just very briefly back then to the value creation, that's step one, which is the service that I can help with. And it's really once you make a decision that standing still is not an option and you want help and you want to explore West London property, then I can actually help to make it as easy and as possible to save you time and money. And to make it as easy as possible for you to basically get what you want and to so it's I would be your personal property shopper, a bit like the lady who helped me to get going. So, and I do help international investors. So that's step number one. And I have different ways of adding value, but I think the big point I want to make is that the value is just helping people to get going, not letting time slip, and to really make it as easy as possible for you to enter the market and start benefiting from being on that flywheel. So the next point is the really important one, and it's what you were talking about, Simon, with yields. Traditionally, people have been saying, "Oh, don't invest in London. The rental returns are so bad." But I've done my homework. I've looked at the numbers, and actually, what we're seeing is that the yields and the rental income relative to purchase price in London is really good right now. It's actually a fantastic opportunity because of the scaremongering. A lot of landlords have chosen to exit the market, which is difficult for renters because renters need somewhere to live. So, due to supply and demand, rents have increased, and there's also been a softening of property prices. So, actually, now is an absolutely fantastic time to get into the London market. And I will be showing you later some examples of properties that actually deliver higher yields than 4 to 5% plus. But sort of 5, 10 years ago, the traditional people were talking about 1 to 2%. And while you can still get higher yields in the north, um, the discrepancy between the two is certainly reducing. What are you seeing here, Simon? Does this resonate?
I would agree that rental yields, and it's back to my point about the don't be caught up too much with the percentages because if you're looking for absolute amount of money coming through the door each month, you are not going to get that on northern properties. You're simply not compared to a one-bedroom flat, two-bedroom flat in London, for instance. The observations I have with this is that I do hear, well, if there are people that are selling up, landlords, property investors selling up, then the people buying them must be moving into them, therefore don't need rent to rent anymore. That's a mistake to think that happens because there's people like me who live in a foreign country that will buy a home in London and just leave it empty, right?
Mm,
Because I can then I know it's an investment. I know the property is going to go up in value, and I'll just frequent it whenever I want to see a show or something like that. Look, this happens a lot. So when people say that, oh, well, hey, surely buying landlords selling, that's a good thing. No, because foreign investors like me, who doesn't want to rent out a property, sorry,
mm,
but will want it as a second home, there's still less properties on the marketplace for one, renters, and now people buying. That's why property prices are going up because
mm,
there are so many international buyers in the UK market, in particular London. Why? Safe environment. Nowhere in the world do you have this asset that's in the UK where you have legal rights to that property. In other countries, you can easily have that investment taken away from you. Cyprus is a great example of that happening to one good my friends who lost property over there, where the government just said, we're taking it back.
wow.
No answer, nothing to do with it. Or you've got political issues going on in your currency. I'm sure you're going to talk about currencies later on, where they plummet and then you lose value anyway. So I think there's a lot to be said and to echo the point that London is a great place to invest, and I can't see it going backwards anytime soon.
No, couldn't agree more. Absolutely not going backwards. And so this really covers step two and step three on that flywheel, that the rental income is good and it's not going backwards. There's appreciation. So that's great. So moving on to now one of my absolute favorite topics is on capital growth. So this is where we've got that slow cook. And people are a bit shocked when I show this slide and I actually quote the numbers. This is London property since 1970, when on average, the average London property price was £5,000. And looking, where we are today, 55 years later, it's worth over 500,000 pounds. So basically, it's a hundredfold. It's 100x just from owning the asset. And what you can see in the beginning, it looks like a very slow elevation, but actually it's massive. It looks visually like it's very slow, but it's actually in 20 years, it's a 20x. And then what happens is traditionally, and I can see the same in stock markets, things slow down and they go sideways for 10 years or so. And this is what a lot of investors have experienced for a while now, that things are going more sideways. But what we've got to remember is that what we're seeing, I believe, is the actual erosion of the currency. So on the one hand, one can think of it being property prices going up, or it could be the value of the British pound going down. And I personally believe that currency debasement and decline has over thousands of years followed a similar path over every 80 or 150 years, where eventually it debases to zero. And that's why it's so important to be invested in a real physical asset, whatever is your physical asset of choice. It could be art, or wheat. Personally, I'm into property. Some people like gold, but property is something that can give you a lot of pleasure, and also people can't steal as much. So what we're seeing here is actually inflation, the impact of inflation, and I do believe that we're about to hit more increase in property. Because what's happened is that we've actually had quite a lot of inflation over the last 10 years, but the property market has gone sideways. So there will be an adjustment and it will start moving up.
Just on that point, Iran, this whole point about properties going sideways and not increasing so much, the one observation is if you had an overlay of this graph with rent increases between 1970 and now, I think you will see a higher velocity going up in recent 5 years than any other time,
Yeah.
because house prices are so expensive that it's going to be quite costly to buy property. So there's more renters. One of the things that you highlighted was rent yields. That's at this point in time. But as rent increases, and it does increase significantly in London, if you rebase that percentage, you'd be shocked to see that actually that percentage could be 12, 13, 14% quite easily.
Yeah, that's fantastic. What a good point. I'll definitely do a slide on that. Um, and it's true, the rent increases have just absolutely they've been shooting up. And so there isn't a unique opportunity now actually to benefit from higher rents. So that's on the capital growth, and it's all about being patient long term and protecting one's wealth. And here this is actually, I was getting ahead of myself talking about stagflation, but what I want to show here is the blue bars. It's actually showing the inflation rate in the UK from 1970 up until recently. And inflation, part of that is, of course, interest rates. So what you often hear people say is, oh, but why buy property if interest rates are going to go up? Then property prices will come down. And actually looking at the real numbers here, they don't come down, because when interest rates and inflation is high, then money is actually looking for a safe haven in order to protect its purchasing power. And what we can see is during this entire period in the 1970s, which was a high inflationary era, property prices increased and then absolutely shot up after that. So I'm a great believer in that actually owning property, a real physical inflation hedging asset will actually protect the purchasing power. Um, and I'm a strong believer in that. Simon, what's your thoughts on
Uh,
the
just to add that one of the reasons why in recession that stocks go down literally in the hour of bad news in the press or a president doing some crazy stuff. Is that because it is so fluid. You could buy a stock, you could sell a stock, and it's done in one space of 1 minute you have it, 1 minute you don't. And when there's a lot of dumping of shares going on the market, then share prices fall quite significantly in one day,
Yeah,
if not 1 or 2 hours. Now, property, you can't do that. So what you tend to find in recession, and it depends on how long that recession lasts for. So to sell a house, it's going to take you at least, I would say, even in recession times, who's going to be able to buy? Not many.
mm,
So you're getting to the stage, well, you probably will be able to sell within 3, 4 months, okay, reasonably, unless you do fire sale. But most people would look to sell within 3, 4 months. Now, if the numbers come back to say, well, actually, this is a short term, and inflations are happening quicker, but are lived very shortly. They're not long recessions nowadays. They
mm,
tend to be bouncing back with the economy. Whether that's true or not, I don't know, but that seems to be happening. And as a result of that, when people are seeing these huge drops in the stock market, which property prices don't, what people are saying is, well, the stock market seems to be recovering again. And my house is on for sale, and I was going to take a hit on it, but look at the recession's back. The recession's kind of gone away. Stock markets are recovering. People feel good about the economy. I'm going to take the house off market, and I'm just going to continue to rent it. So there isn't a direct link between stock market prices falling compared to house prices falling, or vice versa, because they are two different marketplaces to invest, and the time taken to buy and sell a house is very different to stock markets, which, let's be fair, is very emotional when people, wrongly, in my opinion, by the way, will see something happening and then they just dump their stocks because they just follow the trend like lemmings falling off a cliff. It's they
so true.
overreact, right? Rather than just
So
hold
their
back.
emotions. Yeah. Absolutely, that's so true. And it's a great point that actually, due to the property market being less liquid, there's less of a chance that we have these dramatic shifts in values in asset values. In the stock market, things can happen automatically that sales need to happen to rebalance portfolios or when institutions get margin calls. So the decline is accelerated, which can be terrifying if you're a normal saver. Um, but often that's where the opportunities lie. But it is terrifying. Whereas property is a lot more stable and one doesn't need to have these horrific shocks. But the important thing is managing the asset long term and just doing it properly. Um, so Right. So moving on from that is again now the final bit is leverage, and I gave a bit of a hint that this is juicy, and it's one of my favorite bits. So we know we have inflation, we know we have properties that are actually increasing in value, or at least they're holding their value. It's a real physical asset, so denominated in a certain currency that might be declining. It's actually holding its asset and increasing. So the opportunity is actually to take a loan in in normal monetary value against a property, which banks are happy to do also for remote and international investors. And this is something that often surprises, for example, Swedish investors, because there you don't have buy to let lending in the same way that you have in the UK. And there are specialist brokers that I can introduce clients to that can actually that can help to get that kind of lending. And so then by fixing the interest rate below the real interest rate, and you fix it for as long as you possibly can get, the asset will increase while the debt will erode over time. And it's really getting time working for you on that flywheel. Did that make sense?
It did. And more to the point, it's not just capital appreciation, it's the amount of money that you get from that property over time, which you can then reinvest into another property, which again, on this point of, well, you could buy a house, or let's say the back stock markets, right? To
Mm,
buy £400,000 worth of stock, you need £400,000 to invest. But to buy a £400,000 house or flat in London, you could just invest 300,000 or 200,000 or 100,000, depending on how much you want to borrow from the banks. And when that property goes up to 700,000, that is all yours, which
yeah.
stock markets will not go up by the same amount because you
No.
can't leverage. So I think you said it really nicely.
Oh, thank you. Yes. This is we nearly have to reprogram our brains or our thinking about whether this kind of debt is dangerous or good. And I think if done sensibly and not over leveraging, and certainly going with a good solid bank and institution and managing your asset, then it's a really good thing. Though I'm not a financial advisor, I'm just sharing what I have done. Um, and yeah, it is definitely something to consider. So, looking at the whole thing now in totality, let's look at some examples, because that's all theory. What does it mean in, real practical examples? So this is a flat that is not too far away from here in West London, and it's very central. And so we're assuming that investors would want the yield, the rental return, the capital growth, protection from inflation, and to make it as passive as possible. So to buy this flat, you would need a total, assuming it's a cash purchase, this time no leverage, no lending, just parking the money. That would be £424,000. And the yield is actually 7.3, which is fantastic. And here you can see what the cash return would be in year one, and the return on capital employed, which is taking all the costs to acquire it. How much are you getting back? So in year one, it's 7.7%. And when you look at the accumulation over 5 years, where you get the time impact, you have a return on capital employed of 42%. So you can see how you're nearly getting all of the money back, or half of the money back within a 5-year period. So let me quickly go through some more examples. Here we have another one in South Kensington. Some clients maybe know this area well from having studied here. You have these lovely white stucco fronted properties. So here again, it's a cash investment of about £650,000 with a return on capital employed in the first year of 8%. And again, after 5 years, we have 43,000. And here you can actually see the number in cash, to the point that Simon was making earlier, that when that property increases in value, that's actually the cash that you've made. And just very quickly to make a point, when we're looking at the returns, we're looking at combining the rental income, the realistic rental income that could be had right now, with a 2% increase per year. And then what we have is a very modest capital growth assumption of 5% per year, which is very modest given the sort of numbers that we've looked at. As long as you hold long term, things should definitely exceed that. But this is where we get the return on capital employed. So I'd say it's very conservative, these numbers.
Before you go on, I mean, you don't need to go back to the slides. That's fine. One of the things I would applaud everyone to do is look at where you're spending your money or where you are investing your money. Um, because there is always a saying of doodads. There's a famous phrase I've heard where you don't buy things just for depreciation. So a car, let's imagine you bought a nice car, £100,000. Well, how much is that car going to be realistically worth in 5 years' time? It's not good. It's more like that 43% of
Yeah,
what your value is. It's not the return. You're not getting any return. You're depreciating the asset. So
absolutely.
one of the lessons I've always had is never buy cars, always lease them because it's cheaper on the long run.
Right.
And always invest the money that you was going to invest into a car into property because that can then give you the money if you do want these lavish doodads. Then you can easily do that. But honestly, if you're watching this and you're thinking, well, the returns aren't that great, well, equally look at what you're spending your money on elsewhere and then compare these rates because you'll be surprised of how much money we all waste.
Yeah, absolutely. I couldn't agree more. Yeah, definitely. It's a very, very good point. Um, again, people say London is impossible. I thought I'd do a comparison of a cash purchase flat in Mayfair because everyone always jokes Mayfair is the impossible place. How can there be any return there? But actually, we're also seeing that after 5 years, you nearly get close to 40%, well, 37.7% return on capital employed. And that's just phenomenal. And that's in, one of the best addresses in the great safe havens in the world. So now let's look at actually adding lending to this. So a modest 50% loan to value, it can really help to catapult your numbers. So after 5 years here, you can see we have a return on capital employed of nearly 61%. So you're getting close to year, you know, 8, 7, 9, where you actually have all of your money back. And this is where I want you to think about how this could be used flexibly for you and your family. So you might have children now, you're thinking about their futures, and you decide to invest in a flat that could possibly one day be used for your children to live in as students or when they move to London to work. Or indeed, you might decide it as to have it as a pied-à-terre yourself or a place to come to. And it really gives you options when you start by buying a property, letting it out, and then thinking about what you can do once the investment is really starting to repay itself. It gives so many options for your life. So it gives freedom in so many different ways. And I added on another example here for another flat round the corner, again at 50% loan to value. And here again, we're seeing a return on capital employed nearly at 60% um, in 5 years. And this flat is perfect. It's really a beautiful flat. So I hope that will inspire everyone to see what is possible, and really to think not to wait to buy a property or to think, but it is so important to get enough confidence to make a decision and to make a decision to at least have a call to hear more. And it's not just for you, but it certainly has changed my life so much, which is why I'm totally passionate about it. And I really believe in buying and letting the flywheel do the work for you. What do you say, Simon?
I'm not going to say anything more. What would be fascinating, if you could pull up your slide for your contact details, that'd be really
Yes.
good.
Okay.
Whilst we're doing that, or actually, we can talk about that as well if you want to. It's just that contact details for Irene will be below the video description. I'll also post the link to our website, which has got the map as well, so you can see exactly where you can find Irene as well, and there's details on there. So the details will be everywhere to make it easy to
Thank
go
you.
through.
Thank you, Simon. So here you just get a summary of why many people choose to invest in West London property and how I can actually make it easy for you, even if you live remotely on the other side of the world. I'm delighted to help. And I truly believe that it can help you and your families live well for generations. So here you have my contact details and a QR code. And what I offer is really a more detailed guide, this presentation, but in a more detailed way. And so if you found it interesting, please download the guide. It's no obligation, just enter your details. And also, if you're interested to chat more, if you think I can help in any way, I'm delighted to speak to any of you for a free obligation consultation call. I love to help and I love to serve, and I hope to transform many lives as someone has done for me earlier. And yeah, and I have to say, Simon, your services for me as a property investor has been absolutely critical. It's just been fantastic, and it's been one of the best investments. You've saved me a lot.
Well, I shall let the team know because it's they that do all the work. So thank you so much for that, and I shall pass on the kind words that you just shared with us.
Thank you.
For everyone listening, obviously Irene is going to be helping you to invest in property, which it is the place to invest. Obviously, spreading your risk is a good idea. So having a mixed portfolio of different asset classes is right. I get that, but don't overlook property, especially in London, where ignore the yields here, because the yields are of today's rates, the yields of next 10 years is going to be significantly different to where they are now.
Mm.
Especially when you talk about property appreciation values, we talk about rent value appreciation as well. So please do reach out to Iran. Don't sit on the fence. Don't think, oh, tomorrow I'll invest in property. There's a lot of you think that way. I have tax consultations all the time where I revisit that person and say, how's your property investing journey going? And they say, oh, we've put it on the back burner for 3 months. Opportunity will sail by quite quickly if you're not careful. So please, please, please do reach out to Iran to look at properties in London and make that investment decision today so you can invest tomorrow.
Yeah, I'd be delighted to help, and if nothing else, to chat and to help to guide you to the right place or hopefully serve you. And just to finally add that I am fully compliant as a property sourcer and a property buyer for everything that the law requires. So thank you so much, Simon, for inviting me to be on your social media channels, and I hope to serve many of you. If you've been listening, get in touch. Look forward to meeting you.
Perfect. Irene, thank you.
Thank you.